Hi, Lenore here, and I'm going to introduce you to accounting. Now, this is the secret. The secret to accounting is the accounting equation, as you can see right here. And the accounting equation is assets equal, whoops, thinks I have an error in there. So assets equal liabilities and, or let's put in a plus, owner's equity. Sorry for the bad typing. So this is the secret to accounting. If you go online and you look up one of those websites that says, we can teach you accounting in just 24 hours, this is what they're going to tell you. This is the accounting equation. So what does this really mean? Well, it means that everything we do, we have to make certain that this accounting equation stays balanced, that our assets always equal our liabilities and owner's equity. Or in the case of financial accounting, we change owners to stockholders. So stockholders' equity. So what's that mean? Assets are things that the company owns. So what could that possibly be? Well, could be cash, right? Their bank account. It could be accounts receivable. And this would be items that customers, or the IOUs that customers owe the company. It could be insurance, prepaid insurance, right? They purchased a policy. And it could be buildings, could be land. So those are examples of assets. Assets are things the company or the corporation, because we're working with corporate financial accounting, owns. Now, liabilities are items that the corporation owes. So that would be accounts payable. That means the company has purchased some items from one of their vendors or creditors, and they haven't paid for it yet. Think about your Comcast bill or your telephone or your cell phone bill. They provide you the service, but you haven't paid for it yet. Once you pay for it, then you no longer have that liability, and the same holds true for the corporation. They were provided a service or they received some goods that they haven't yet paid for, so they owe it to the vendor. In addition, there could be notes payable or loans payable. So think of it this way. Anything with a payable last name is something that the company owes to someone else. Now, stockholders' equity. This is the investment in the company. So with owner's equity, that would be the owner's investment in their own company. And in stockholders' equity, this would be the stockholders' investment in the company. And this would be things like common stock. So when you, as an individual, purchases stock from a company, you are putting an investment in that company. So the company has to record that because they're giving you stock, you're giving them money. That's an investment. So this is the accounting equation. This is the secret to accounting. Assets equal liabilities plus stockholders' equity. Now, there is a little bit more to that equation, and I like to call it the extended equation. So I'm going to write that here. Assets equal liabilities plus stockholders' equity plus revenues minus expenses. So this is the expanded accounting equation. What are revenues? Well, that's the product or the goods that the company sells. Product or goods. So think of sales. And expenses, that's going to be the cost of running the business. It's an operation cost, operating the business. So that's the extended accounting equation. Assets equal liabilities plus stockholders' equity plus revenue minus expenses. That is it. That's the secret. So you need to memorize that equation, because later when we start doing transactions, we need to make certain that this equation always balances. So with that, Lenore out.